Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of the dual status taxpayer, dual status tax return. We'll give you a little conceptual framework as we approach tax season, or as we're in the beginnings of tax season for those of you on an extension. Dual status taxpayer. So typically what that means is that a person has two statuses, right? So they're a U.S. person and a non-U.S. person in the same year. Some examples. Jim comes to the United States on an H-1B in April and stays for the whole year. Well, he'll meet the substantial presence test because he's been here for a sufficient amount of days, and for a portion of that time, he was not a U.S. person, right, for those first few months before he was here. Another situation, common situation, would be in the last year. Maybe reverse that situation. Maybe Jim was in the U.S. for 4 months and then left or gave up his permanent residency. So in that final year, he is a U.S. person for part of the year and a non-U.S. person for another part of the year. It's super important. Why? Because depending on the source of the income, it may significantly impact the tax liability. If he's only a U.S. person for 8 months out of the year, let's say, but for those first 4 months is when he earned a significant amount of money outside of the U.S., well then he wouldn't get taxed on his worldwide income for that dual status year for the first part of the year. So it's very important. So some basics. The U.S. taxes you on your worldwide income. That means if you are a U.S. person, which means a U.S. citizen, lawful permanent resident, foreign national who meets the substantial presence test, you get taxed on your worldwide income. It doesn't matter if you live in a foreign country. It doesn't matter if all of your income is sourced from a foreign country. If you're considered a U.S. person, then you're taxed on your worldwide income. Now, you may be able to offset, minimize, or eliminate that tax with things like the foreign tax credit, foreign earned income exclusion on earned income, foreign housing exclusion to a degree. But at the end of the day, baseline perspective, the U.S. taxes you on your worldwide income. So when you're a non-U.S. person, you don't get taxed on your worldwide income. You get taxed on your U.S. sourced income. And that's typically FDAP, fixed determinable annual periodic, basically means passive types of income, and an ECI, effectively connected income. Typical situation for ECI, if someone makes the election, is they have a U.S. rental property. They get taxed at the same rates a U.S. person would get taxed. They get to take all the deductions. With FDAP, there's no deductions. But the key point is, if you're a non-U.S. person, you're only going to get taxed on that portion. So it's important that you go through the proper motions in order to cement that status as a dual status taxpayer, which means there's certain things you have to file in the first year, certain things you have to file in the final year. A few other factors to keep in mind when considering whether, because some people are like, I don't want to deal with the dual status, I'm just going to file for the year. Well, one, you want to determine what portion of your income was U.S. source, what portion was non, so you could determine the tax implications of doing the dual status or not. Form 8938 is also an issue. For the U.S. person portion, you have to file an 8938. For the non-U.S. portion, you don't, depending on what the maximum account value is during the time you're a U.S. person will impact whether or not you have to file the 8938. Other forms as well. As a U.S. person, you got to file 3520, 5471, etc., etc. So you want to see for what portion of the year you have to do that. Is it a short year return? Things of that nature. FBAR gets a little bit dicey. It's all the rave these days. FBAR, foreign bank and financial account reporting. As a U.S. person, you have to file the form. So if you're a U.S. person, only part of the year, you still have to file it. If you're a U.S. person and you go overseas, you make a treaty election, let's say, to be treated as a non-U.S. person, you still have to file the FBAR. But the converse isn't true, right? If you're a non-U.S. person and you make a 6013G election, for example, to file with a spouse who's a U.S. person, that may not necessitate you filing the FBAR. It's super confusing stuff. If you've been out of compliance in prior years, it's super common. There's various programs you can use to get into compliance. If you're willful or just can't certify under penalty of perjury that you're non-willful, you would do VDP. Otherwise, you would do one of the non-willful options, which is the streamlined filing compliance procedures, domestic and foreign, delinquency procedures, and reasonable cause. We've got a ton of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate to your matter, and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.